Mr. Milind Karmarkar, Fund Manager and Director with Dalal Broacha, to talk about the 20s and which are the themes which essentially could be crucial, important and will continue to dominate equity markets. Mr. Karmarkar, always great to have you and thank you for joining us.
Thank you. This time I have come pretty early, I think.
No, we are talking about 10 years.
Okay.
So we are talking about 10 years.
A long term.
So
Okay.
long term. This is the long term what we are talking about.
Fair
This is
enough.
not 2020. This is the 20s.
Yeah.
So the first question which we
Okay.
want to just bring out, and
Yeah.
it's going to be more like a question, which is that what will be the consumption or the driving theme within consumption for this decade?
So, as you know, I am always bullish on consumption, and the main reason, of course, is that we are currently at about $2,000 per capita. So the move from $2,000 per capita to $6,000 per capita, I think should be taking place in the next 10 years. And I think that will be the prime growth driver for the economy and for consumption. But again, within consumption, there are a lot of different sectors. Like the way we define consumption is that anything to do with increasing per capita income, or whichever sector which can be benefited by per capita income. So it can be insurance, it can be finance, it can be hospitals, it can be FMCG, it can be retail as well. So it encompasses a vast area of the economy.
As a child, when I was growing up, my father used to always love a Manoj Kumar movie which talked about in India there's always been need for roti, kapda and makan.
I agree. I agree.
That is going to grow in India, roti,
Yes.
kapda and makan.
Yes.
But the way India would be consuming and what they would be consuming could change. Millennials are talking about experiences more than asset ownership.
I agree.
Everyone's talking about traveling more and spending more on smartphone rather than buying a car or an asset. So
I agree.
consumption will grow. But my question to you is that what will grow within consumption is what we need to figure out, sir.
Okay. So let me go back to the United States. When the actual consumption boom started in the United States, the top 5 companies that time were all FMCG companies. And by, I think,
This is 1980s.
Yeah. And by 1990s, towards the end of 1990s, top 5 companies were all retailing companies. So that is what happens. So I think you got the answer at least for one of the segments. Second is, of course, there are, it's like travel, for example. As you said, experiences. Travel again is a big opportunity in India. So anything to do with travel could be interesting. There could be new things which come up, like different types of platforms, but unfortunately they are not yet listed. So we'll have to wait and see. Insurance is another sector where I think can do well going forward.
Okay. It could be a coincidence, but this is something what Ruchir Sharma is claiming, that the outliers of the previous decade are unlikely to be big, deep compounders of this decade, which is that if consumption has done well between 2011 to 2020, consumption stocks may not give you that kind of a return between 2020 to 2030.
Right.
Do you think that consumption will grow, but consumer stocks may not make money this decade?
So consumer stocks may not make money. So I don't know what will grow and what will not grow, but the opportunity is really big. Like there are many retailing companies like Bata or Trent or many of them who have a turnover of less than $1 billion. So that's where the opportunity lies. Or there could be, so maybe it's possible that the larger companies may not grow. Something like an insurance, it can be easily a compounder at 18% year on year for next many years. So that could still be an opportunity.
Let's pay attention to something which we spoke about last time. You're a purist.
Yeah.
You always believe in one simple theory: investing is about buying gold at the price of silver.
Yeah.
You don't pay for diamond and then get gold, right?
No.
If you buy a consumer name or a retailer name like Nestle, the forward P multiple, 1 year forward.
Yeah.
1 year forward, sir. I'm not talking about 2014.
I can see
1
that.
year forward is 100.
Yeah.
DMart is 90.
Yeah.
There is scope for expansion.
So if a company is growing at 24% year on year,
20%.
20% to 24%.
Okay.
In 24%, in 3 years' time, the multiple can come down by 50%.
But then you're assuming for 3 years price will not go higher.
So whenever a company continues to grow at 24% year on year, the multiple remains high.
Okay.
For example, in case of Walmart, Walmart in 50 years, even after falling now, Walmart in 50 years has grown 3,000 times. That's a compounding of 18%. And that's what I'm looking at. So I'm willing to take a bet that the company may not show capital appreciation in next 2-3 years. But what I have seen is that if the growth continues, the multiple continues to hold. So there may not be a PE expansion, but there will continue to be a growth in price.
In the consumer space, where do you see this rare combination of PE expansion and earning expansion?
So I would not like to name certain things because I am a fund manager now. But I can tell you of companies who have got multiple businesses, and some of the businesses are not doing well, and that is the reason why the earning looks depressed or the PE looks high. But once those businesses start making money, the PE can come down significantly.
What will happen to cement, steel? These are also stocks which could be called as a bet on consumption. Because if India will consume more housing, you need more steel. If India will make more roads, you will need more cement. If low-cost housing has a trend, the roti kapda makan, the makan part, if that is here, steel would be required.
I agree with you. So they can give you a short-term decent appreciation, but I can't see them as a 10-year, 20-year compounders. Okay. So they can do well in 2 years, 3 years, even 1 year, 6 months. But frankly, I don't understand these things. So I am willing to take a longer-term bet than taking a shorter-term view.
Okay, let's move on to our next question. And we're not talking about this quarter, next quarter. We are simply talking about the asset allocation in this decade.
Yeah.
I mean, last decade, if you bought into consumer names, you hit a home run.
Yeah.
If you bought into steel and power names, you've not made any money.
Right.
Polarization in the market, the whole migration towards mega trends, the whole migration towards where markets or fund managers are seeking what could be called as a safety net, because earnings visibility is only there in a Trent or a Bajaj Finance or for that matter Bata.
Yeah.
As the economy recovers, will that open up? And will some of these good consumer or consumption stocks move into time-wise correction?
That's possible. There could be some stocks which will move into time-wise corrections, and typically those would be large cap stocks, if I'm not mistaken. But in mid cap stocks, I don't think that worry is there as of now, at least. But the larger caps, where the top line growth is sub 10%, you can see a time-wise correction happening there.
When you are investing, and you are investing, you're managing public money now,
Yes.
you're a fund manager
Yes.
now, change of role. We'll talk about how you're managing that. But my question first is, are you telling our clients that, look, I'm buying these consumer stocks, I'm buying these expensive stocks. So if you can be prepared that for 3 years your NAV will not move, then only give money to me. Is that the basic messaging?
Yes, I definitely insist on talking to my clients or customers, and I want to not educate them, but to tell them what they're getting into. So we also manage PMS, as you know. So people who have been with us for last 12 years, nearly 60%, 65% of their portfolio is just the same. It's a buy and hold. So I need to clarify to my clients or customers that this is what they are getting into. So yes, I do that.
Okay. Let's talk about insurance.
Yeah.
What is the right way to look at the insurance business?
So there are two things. One is that premium per capita, which is extremely low. And as your per capita goes up, obviously your premium will go up. So that is a no-brainer. And second is the kind of penetration. This is as far as the life insurance is concerned. When it comes to general insurance, I think the new laws which are being put forth, I think those will drive at least insurance, repeat insurances. Like take for example, two-wheelers. So earlier, after the first year, many people in rural India were not insuring. But that is changing now. Everyone has to insure, and the first insurance will be of 2 to 3 years. So automatically, there will be growth in general insurance as well. So I think I told you last time also. So I was just asking my team as to how many of you have your house insured. And interestingly, none of them had. So the penetration in India or the understanding of insurance in India is extremely low. But as times change, as people get educated, things will change, and that is where the growth is going to come from.
So if private banks were the high growth sectors for last 20 years, can insurance be the high growth sector or high earnings growth sector for this decade?
I think so, because I expect them to grow at about anywhere between 15 to 20% for a very long period of time.
You bought into Bata. It's been
Long back.
long time back. 34x is what Bata has done in last 10 years. A very niche category, footwear category.
Yeah.
We all want footwear. We all have more options in our personal wardrobes now, but we don't talk about this as a large sector. Apart from footwear, which are the other niche consumer pockets which you think will emerge in this decade?
I think jewelry could continue to be. I know the Titan has done exceedingly well, but even footwear, I don't think we have seen the best of things. Best is yet to come. Like when I was talking to Bata some time back, they were saying that I told them that in last 10 years they have been able to grow their price by 10%. So if you consider a 5-6% inflation every year, leave aside that, they have still been able to increase the prices by 5% every year. And despite that, they still continue to maintain the volume. So as per capita income goes up, I think that is what will happen. A 500 rupee chappal will no longer, 10 years back it was 50 rupees. Today it's about 400 rupees. And I think going forward it may be 2000 rupees.
The nominal GDP of India for the better part of last 10 years was almost in double digit.
Yes.
If the nominal GDP of India structurally comes below 10%, inflation remains low, growth becomes low, we come down from 12-13% to 8 or 9%, what would be the impact of that?
No, I don't think that will happen, because this low GDP is nothing different. You go back to 2001, we had a 4.8% GDP. And from there the GDP moved up. Inflation also, I think we will continue to be at 5-6%. Like when everyone was talking of a low inflation, suddenly this month we are up to 7% again. So 5-6% inflation will be there in India at least for next 7-8 years.
And how will the consumers react to it? And consumer stocks adjust to this kind of scenario? So
most of them are able to pass on the inflation to the customers, because as long as your per capita income goes up, it doesn't matter. So that will continue to happen.
Okay, let's move to our next question. We've talked about the polarization nature of the market. Very important for us to also talk about consumption outlook for 2020. When I say consumption outlook for 2020, what has been your experience? You've looked at markets for decades now. How does consumption come back? Who gains when you go through an economic slowdown? Will the big get bigger, or will when the disruption or dislocation happens, new winners come out?
So, frankly, if you look back, consumption had not been the key growth driver for the previous at least 3 decades. Last decade, consumption has done well. And the other sectors have not done well. But again, if you see between 2003 and 2008, your per capita GDP, or 2002 and 2008, your per capita GDP went up 3.5 times. So that has benefited consumption in the subsequent decade. I think as long as your GDP goes up from 2000 to 6000, you will continue to see this boom. But I think this time the boom probably could be you can do better by investing in companies like insurance or hospitals or things like that. Services, I would say.
A purist would say that for consumption to pick up, investment has to pick up. Indian investments are not picking up. Best of the corporates like Reliance is not talking about deleveraging the balance sheet. With the exception of Adani, nobody is putting a brave foot forward and talking about commitment to a greenfield project or a brownfield project. Consumption and investment are 2 pillars. They have to be rolled over. They are intertwined. One pillar is here, one pillar is here.
So I think we are looking at an economy which is at its stroke. So from here I do see the economy picking up, because what happens, I'm giving more of an anecdotal evidence that between 2001 to 3, investment started picking up only when the interest rates started moving up. I don't know what was the reason, but probably people start thinking that now if I don't invest now, then I'll have to invest at a higher interest rate. So I think this time also it's no different. Investments will start picking up, and that will drive everything else. But investment will start picking up. I'm quite sure about it.
It was generally believed that consumer stroke FMCG companies had an edge because they were able to grow because of reach and distribution.
Correct.
They were able to occupy important shelf space with retailers. And incidentally, not too many brands have got created. But the world has changed. I mean, today if you want to buy tomato ketchup, you do a Google and there are 250 varieties. So what happens to this unique edge which consumer companies had because of distribution and because of reach?
So I think consumer companies may not have that kind of an edge which they have had earlier, but it will be the retailers who have this edge. Now retailer can be someone like an Amazon or someone like a DMart or someone like a Star Bazaar or a Big Bazaar. So because that is what we have seen in the United States, that over a period what happens is that baton moves to the retailers rather than the FMCG companies, and I think that is about to happen in India as well.
If I map the 10-year chart or the 15-year chart of Amazon and Walmart, I mean anybody can guess that where money has been made. Absolutely. If that is a global trend, why do you think that will not happen in India?
So it will happen in India. I'm not saying that it will not happen, but so most of these people are going online as well, and I think online is another way of selling a product. It's not the only way of selling the product. So I don't think these people are so small as of now that they don't have to worry at least for next 7-8 years. And I think by that time their platforms will also be equally robust and they will also do well. But by the way, selling grocery on a platform is far more expensive than selling grocery in a physical format, a brick and mortar format.
Why is that? I've never heard you talk about autos. Auto penetration levels, aspirational levels, per capita, desire to own a bike or desire to own a SUV. This is a desire which was always there, and this desire will only grow because of awareness. I never see you talk about, okay, let's buy Maruti, let's focus on Hero MotoCorp. These are zero debt, great outstanding businesses.
I know they're great businesses, and maybe I missed on them in the previous decade, but now I think they have a lot to think about, because there is a lot of change which is happening, attitudinal change basically. Because as we see, I myself don't use a car, I prefer to go by Uber. And I'm sure there are many like me, especially in cities, who prefer to Uber it rather than going by a car. So general demand for automobile is likely to come down. They will continue to be good companies, but whether they will... So it's like this, that I will look at any business as long as it grows 25% higher than the nominal GDP growth. And I consider nominal GDP growth of India to be at around 11-12%. So any business which cannot compound over a longer period of time at more than 15%, I may not look at that business, because ultimately it will be a wealth destroyer over a longer period. So as of now, at least I think that it will be very difficult for automobile companies to grow at that rate. That's the thing.
Okay, fair point. I mean, just trying to understand the thought here. Let's now put in the other angle, which is the entire Makan angle, right? We discussed roti kapda, low cost housing. Indian economy in terms of home ownership is really low.
I agree.
Everybody wants to buy house first and then maybe stocks later on. HFCs have seen a disruption. Is it a good time to revisit HFCs?
It could be a good time to revisit HFCs, I agree. So
what is stopping you?
It's not stopping me. So I'm looking at financials as a whole. So I'm looking at banking and finance, and I think they will also be compounders. Now, one of the best companies in the housing finance sector, which was a mid-cap, which was Grah Finance, is now with Bandhan Bank. So I'm looking at that sector, and maybe I'll get something which I can buy and hold. But as far as real estate sector is concerned, I think there is some more time before it can come up and start moving.
Financials account for nearly 40% of the index. That number was as low as 2930 in 2009 and 2010.
Correct.
When a sector or when a sectoral representation reaches to 40, it is widely believed that that marks as the peak of the sector. It's happened several times. What stops it from happening again?
So it's like this, that if you see the driving force of financials now, especially banks, it is private sector banks, it's predominantly retail loans. And that is going to be the key growth driver there. So they will remain as about 30-40% of the index. They may not go up, but they will continue to remain there.
Okay, that's the conversation coming in with Milind Karmarkar, snippets of which you can catch through the day only on ET9.